Hey, what's up guys, it's Matt, and in this video, I just wanted to give you guys a quick tutorial about how I find price imbalances using the volume profile tool. So I've received a ton of questions about this, so I figured I might as well just make a video about it. So we'll be discussing the volume profile, imbalances, and much more. So that being said, there's no better way of giving an example than simply looking at Bitcoin, as this is one of the most popular assets, and I'll use a previous imbalance to demonstrate this. What I look for before I even take out the volume profile and mark out any sort of imbalance is I want to see a trending market that left a large bullish or bearish candle behind. That's usually the biggest clue that you're likely to have an imbalance. And that's because these large movements are typically preceded by supply and demand zones or order blocks, right? And so what that basically means is that when you have a trending market or a large bearish or bullish impulsive move, which if we think about that, a trending market on a higher time frame will typically look like a large impulsive wave. But anyways, before you have any of these large candles, you'll typically have a period of consolidation, and this doesn't just happen in one block, it gradually happens over time. But you'll have an area of where institutions are gradually placing their orders, a period of consolidation followed by a massive spike into the upside or followed by a massive drop, okay, as they control the markets. And so they usually lead the price action towards leaving these large bullish or bearish candles. And depending on the asset that you look at, right, and your broker, these large drops might leave gaps behind, which is why imbalances can also be referred to as price inefficiencies or gaps. And what that basically implies is that as the price quickly moved away from point A to point B, although orders were placed along the way, due to that quick and sudden movement and that volatility, and due to the fact that supply was either exceeding demand or demand was either exceeding supply, not as many orders were able to be filled, right? Because for every buyer, you need a seller. And if you're a seller, you need a buyer. And you're not going to always have that at every single price, right? And so in this case, as we were dropping, we broke the market structure, and we also broke out of this trend line that we were briefly respecting prior to that. And so this is where, when I noticed this, right, this is a fresh level that hasn't been retested since up until this point. So this was a few days ago, up until September 12th or 13th, we didn't retest this price point. So that's where now I would take out my volume profile tool. And so what I would do is I see this bearish trend in this example, and I would connect to the most recent swing high, and then I would connect to a swing low. I honestly don't even have to connect all the way down here, but what I'm basically trying to collect is all the data prior to this massive candle and following this massive candle. And so now, before I even connect to these price points that were left on September 12th and September 13th, notice how on the volume profile here to the left, we have this region where we had low transaction volume, right? So you pretty much have this gap. So taking a look at the majority of the volume profile, especially what I have here in blue, this would represent the value area. So during this point A and point B, this is where we had the majority of transactional volume, as this is where price was consolidating and everything was efficiently filled. But this represents an inefficiency in the market, which is why sometimes if you use the volume profile, you'll simply match up with a gap. And so this area would simply represent a price imbalance. So I would connect to these levels, right? I like to look for the area where we have the least amount of transaction volume, and also I'd like to see larger gaps, as that typically implies that that's an area where you likely have a larger imbalance, right? So we can connect here from around 22.8 thousand down to around let's just call it 22.2 thousand. And so there we go. Now we can see how previously this was an imbalance as the price dropped. Again, this is a fresh level that we didn't retest as the price action continued pushing lower. And then when we finally retested this point on September 12th and 13th, that's where, once we pushed into this level, more institutional orders would have been placed. So previously not as many were placed, but then once we tapped into that, that led to the next drop down. Okay, so now if I take the volume profile and extend this to the right and connect to this area, now this shows us how previously we had this imbalance, but now this no longer displays a price imbalance, right? So that's the key takeaway here whenever you guys use this. Now, something you have to keep in mind of is that usually you're taught with price imbalances that whenever you have these large candles, that what you should look for, you look at the last candle's wick and the following candle's wick, you want to make sure it didn't spike into these levels. And although this is a general concept that works, what you'll find is that if you look on a lower time frame, sometimes you'll have to refine these points, right? So in this case, if we connect it to this entire candle, now if I take the volume profile, go back to what it looks like, although in theory, it would make sense to connect to this entire candle and you're free to do so. Notice how we had more volume down here towards the bottom of this candle. And that's because if I drop down to the 15-minute, since now we're on a lower time frame and we can get more data, when the price did push down into here, it technically retraced and mitigated this region. And this is just one example. Sometimes what you guys will find is on the 15-minute or on the 5-minute, the price has already been efficiently filled as it was pushing lower, and so it mitigated these regions. And so if you want, you can go down to a lower time frame, so the 5-minute, the 15-minute, the 1-minute, and refine these points. Or you could simply just use the volume profile, because it's going to do that without you having to drop down to a lower time frame. And sometimes I find that to be helpful. Now, do I always enter a trade inside of an imbalance? Personally, no. I'm not as aggressive. I like to wait for more data to play out. I like to see that market structure shift and that rejection first. And then also I like to combine that with the overall market structure, because what you guys will find is imbalances happen left and right, but you sort of have to understand the overall context of the larger market structure in order for that to make sense. Because here on the daily, the reason why that worked is because before we left that imbalance, right, the price was trending upwards. We rejected the top of this range. We had a liquidity grab towards the middle of August, and then we dropped down following this break of structure and pushed into the downside. So then that makes more sense when we push back into this level and retest this point, because you understand that the price is still technically in a bearish market. And not only that, but we also had these equal highs to the left. And so what you guys will find is whenever you have an imbalance, sometimes an imbalance might be above equal highs, or it might be below equal lows, as this also represents a region of where liquidity would be residing, in this case up above there. The last point is some traders also like to combine imbalances with the Fibonacci tool. So they like to look at Fibonacci retracement levels and combine imbalances. So in this case, if we match up that swing high down to this swing low before we pushed into there, this imbalance would have lined up right in the middle of the 61.8. So typically what I find is they're usually around the 61.8. Sometimes they're between the 70.7 and the 78.6 level. In this case, that's where the supply zone lines up. And yeah, so hopefully this helps. You guys can play around with that. Let me know if you'd like for me to make a part 2 or a video where I discuss more. Down below, if you're interested, you can join my trading community and my private elite group, where I include more content just like this and have in-depth live streams with members multiple times per week. I hope you all have a good day. I will speak to you in the next one.